morning. Good to have you on the show. And Trump is definitely keeping our lives excited. What about the equity markets? Because they, much unlike what one would have thought, are showing some great amount of resilience. Today, though, do you feel that there could be a knee-jerk reaction?
See, frankly speaking, it has already been priced in. If you really look at nearly for a month, when this uncertainty was getting built, if you recollect, we were talking about initially that India will be the first to sign the deal and that will be a roadmap for other countries also. But that didn't happen. So market has already been slightly nervous about it and is all up to large extent is factor. If you recollect, 2 days back, he's already made an announcement talking about 25 and then raising it to 100%. So see, anything above 25 or let's say even thing above the competitive, let's say example like Bangladesh, you have 20% and we are 25 and talk about textile. So obviously the 5% gaps is pretty large. Our business is anyway unviable at 25 also on a relative basis. And whether 25 becomes 50 or 50 becomes 100, it doesn't make any difference because the unviability is already there. And I think the way I look at this thing, every crisis India has evolved. Okay, if you really look at in the last 1.5 or nearly 2 decades, if you really look at every crisis, India have moved to the next level. And I think I respect Indian entrepreneurs. And if you recollect our journey from 1991, how India has come back after every crisis, I think this is an important lesson for us also, not to be dependent on one country or one style of way of doing things. So I think it is a great news from a longer term perspective. Indian entrepreneurs recover, and I think the way government is also handling instead of focusing only on the US related thing, they are working very closely on the bilateral talks, whether we have seen this happening in UK with the Euro, it's going to happen with Middle East. I think that's the way going forward. I think I will look at slightly constructive thing. Every jolt will make you a stronger from a longer term perspective. So maybe small setback here and there, but since it's an entrepreneur driven economy, I think we'll come back.
Yeah, absolutely. But Sandeep, I was just looking at the figures, the exports to US and imports from the US. And I think the proof is in the numbers because the impact to GDP is going to be only about 2 to 3%. Having said that, do you sense that there could be perhaps in the longer run some multiplier effect?
See, if you look at, it's not even, last year it was 2.2%, and given what is happening, it can even come down below 2 also. So it's not any meaningful impact. And then you have to also dissect what is up to there for the pharma and the exempted sector. So exempted sector also contributes significant numbers. So after excluding the exempt sector, the numbers are not meaningful at all. And again, you have to keep in mind, these are all great posturing. That's the way from as a behavior analyst, I look at the posturing game is going on. Now, every company in US or whether they're talking about has already done stocking up to large extent. So if you really look at last quarter number of some of the companies, it was really good. I think the same trend continues there also. So I don't think, at least for quarter or quarter and a half, I think there is enough inventory in the US. And I think this is a posturing game. I think by end of August or end of September, I think somewhere we're going to work out. See, a lot of people read Trump in a very different manner, people criticize him, but I think that is his style of doing things. He's a businessman. I always say he's not going to be a deal breaker. He is a deal maker, but he will do it his terms and his way of doing things, how to create noise around him, pressurize you. That's his way of functioning. He managed with management by chaos sort of thing. So he will create chaos around you and then he will ask you to settle down. If you really look at the day for yesterday's press conference, largely dedicated for India, of late he's not able to settle scores with China. He's not able to do much with Russia. So he's indirectly pressurizing India to manage Russia. That's the way I read it. And I think it's a great posturing game. And so far, India has played it very well. We should not give up so easily because ultimately we are looking for a multipolar world, and in multipolar world, bilateral treaties which are more effective, which are cleared by the respective parliament or their cabinets, and which cannot be changed with the whims and fancy of one individual. So from a longer term perspective, I'm not at all worried. And even I'm very optimistic something will work out. This is a great posturing. Both the sides have showcased posturing. It's a more of a posturing style rather than reading too much into it.
So, but Sandeep, what's in it for investors amid all this posturing and all the noise in the news flow? What should Indian investors be doing? Because like you said, we've already had a rough patch of July. I was just looking at the short build-up. That's quite pretty much at high levels right now. So a lot of damage is already baked into the stock prices. But the question is, what is the positive trigger? What could take markets up from here?
So I think first of all, let's be clear, India is buy on dip. Let's understand larger pieces. Okay, once your larger picture is clear, then we'll address the near-term and medium-term challenges also. So obviously, larger picture is clearly India is buy on dip, and hence somebody says, I will sell now and try to rebuild my position again when it looks slightly clear. I think that market will not give you any opportunity. If you recollect, few months back also, we were very vocal about the small cap will bounce back quickly, mid cap will come back, when whole narrative was getting built around mid and small, that they have made a long-term talk. So because if we have to look at ultimately this is numbers driven economy, if we are doing very well, on absolute basis economy is doing well, on relative basis we are doing extraordinary. Now there will be some patches, okay, here and there, because I always say no moves are going to be linear. So in a decisive bull run or difficult phase of bull run also, you will see this bounce of volatility which we are facing right now. I think the way I look at in terms of behavior perspective, people are very cautious. Participation level is on the lower side. Worry is that FIs are continuously selling, and that is also sometimes I see as a part of a diplomatic things of a strategy. If you recollect 2 years back also, we have seen when noise related to China happened, and China was largely boycotted by the FIs, they dump it and ultimately they bought at 30-40% higher. I think something similar stand is also getting built. If you really sit down and analyze this data, a large amount of selling is coming from US centering long accounts. And that's the way I will also try to read. This is some messaging is giving to us that even we can, FIs can be a bigger seller in the market. That could be another pressure technique. So the way I look at it is that one has to play this game with a more maturity. You have to be India-centric portfolio. Look at a Quant portfolio. We are largely domestic-centric portfolio, except Pharma. Okay, Pharma is the exempt sector, and I think it's a no-brainer trade right now. He is exempted globally, and he does not have choices. Okay, because if India shut the Pharma for 1 quarter, there will be a bigger crisis in US. So I don't think, and I think so far India has matured very well. They have not reacted the narratives or the noise which he is creating in the media on regular basis. I think we have to deal with a mature manner, and our government has handled it quite well. So I think the way advice will be, remain invested. Any sharp opportunity of fall comes with gap down happening, that should be a buying opportunity. I don't see we have any issues in the short term and medium term of India also, because crude is also corrected, commodity prices are very much under control, inflation is falling, RBI is taking right step in terms of creating liquidity. From a SEBI regulator also, they are taking all the step to ensure the confidence in the capital market. So I think government is doing a great job. I think it's the maturity of the investor, and we should also support a country in this crisis rather than getting capitulated at the bottom of the cycle. In fact, if you ask me, my worry is not India. My worry is actually US market now. This is what I said in January, and we talked about 15-20% correction happening by March, which played out well. We are getting similar signs of vulnerability. The complacency is extraordinary in US. And it's a question of time. The US market will correct sharply. So I think all the noise and narrative which Trump is making right now is also linked with the market has moved up. If you recollect, he started making noise in January, February, and then market corrected sharply. He immediately changed his stand, okay, on the treasury front particularly. Now, if market corrects sharply again, which I am expecting, particularly for the US market, his narrative will again change. So I think it's a very capital mind country, and he himself is a businessman. He understands these things very well. So I think the way I look at this is a great opportunity to invest in India-centric mutual fund, India-centric portfolios, rather than looking out for overseas opportunity or overseas-centric schemes. So I think risk reward, if I have to look at, I think India is in a very comfortable situation. I'm not talking about next 2 or 3 months perspective. But if I look at for next 3 years perspective, is opportunity. And even 3 years, 3 months, if I have to say, I'm saying the US is more vulnerable than India. So I think net we should be uh, maintaining our calm and just remain invested, remain conviction about our own companies, our own entrepreneurs, and our own government, which is taking right steps.
Sandeep, a lot of food for thought in there, but I just want to pick up on the US indicators that you're talking about, that they could be poised in or headed in for a deeper correction. In that sense, do you think in the interim, India is decoupled right now, or if they fall, we will fall too?
So a few months back also we have talked about decoupling process begin. In fact, in the March, I think we have written about India decoupling. I think up to large, I will not say up to large extent, up to small extent, the decoupling process has begun. Okay. See, anything we start, it takes is a few years and few quarter process, not going to happen overnight. So if you ask me purely on our macro understanding and our behavior thesis, what we have built uh, in last many years, we are confident that India decoupling process has already begun. And not only India, I will also say the emerging market, particularly Asia-centric emerging market, in a far better situation than the developed economies or the developed market. And that trend is quite visible in the currency movement also. And like whole world in January has written off emerging market and talked about how US will go and reverse exactly happen. I'm not saying you should take a contrarian call, but that was the thought process. People thought that Asian market currencies or the emerging market currency will collapse significantly. Yes, they corrected. And if you really ask me, either we have already seen the worst of rupee or we might be seeing very soon. But I think we are in the fag end of that also. In fact, if you ask me from a longer term perspective, I think the probability that 2025, remember, as a long term top for USD, INR, and Indian rupee should appreciate over a period of the next 5 to 6 years. And that is the clear message. If I have to do a reverse calculation and try to interpret if rupee is going to get stronger over a period of next 5 6 years, then obviously it's a clear indication the Indian market also should be doing very well.
Oh, yeah, absolutely. Bottoming out of equities, topping out of dollar. But Sandeep, I want to address some sectors as well. And you have great understanding about the pharma sector. We've touched upon this earlier as well. For now, they're exempt from tariffs, but there is all that noise that eventually it's going to be 250% tariffs. What's the practicality of it? And for Indian investors, do you now make that disconnect that let's look at India-focused pharma companies as opposed to the ones which do manufacture for the US?
So let's sit down and analyze rationally, all this. And I'm always surprised to see even best of the analysts get carried away in this narrative getting built about 250. Let's understand the US compression. If you recollect, he has been threatening for a while, but if you really sit down and analyze, he has been targeting innovator, not generics. So the point which he is trying to always make, a lot of companies who are US-centric companies, but they manufacture their product, particularly from Europe area, and then they have huge 50 to 80 or 90% margin and they sell in US. So they understand there's a very large margin they are making, and that's what something they are talking about. A lot of people read as at least from the R&D perspective, the budget will go down. So that's a secondary impact or tertiary impact which can happen. But their focus is on innovator, and this time also he was not able to do anything. So despite making noise, then ultimately his written letter, bring down the prices. Now let's understand the larger thesis. Okay, what is the way US? Is there any source of buying a generic or pharmaceutical? India has been one of the biggest supplier of generic thing. And if innovators are penalized for whatever reason, I think money will or people will shift towards generic. And Indian generic are 70 to 90% cheaper as compared to comparative formulation in US itself. So I think US or Mr. Trump does not have too many options. We to just try to control pharma. I don't think. See, you can defer you're buying a car for 2 years. You can defer buying garments or clothes for, let's say, for 6 months or 8 months. But you can't defer even buying medicine for even for next 2 hours also. That is the compulsion. Excuse me. That's a compulsion he has. So I think we have to understand with more maturity, what is the objective. Yes, he is making noise. He does not have choices. And anyway, if you want to source somewhere and setting up it takes 3 to 5 years time to build a capacity. And even then, even US FDA approval take nowadays around 12 to 15 months, even 18 months also. Within lot many plants are still waiting for US approval. Within US, they are not able to devote time. Their bandwidth is also limited. So I don't think anything in a hurry should happen on the pharma space. And Indian generic are in a very, very comfortable thing. And some of the company like we were listening to, Rupin, they have um, manufacturing facilities in US. Arvindo is one of the large player, also have 2 manufacturing facility. Third one they have recently acquired. So we have to identify all the companies more from a backup perspective. So all the generic companies, all the pharma company who also have bases in US or other country, particularly if they have base in US, will psychologically give them comfort. If something can drastically change, they can easily export or manufacture there. I think that if you ask me, one single thesis in the current context is the beneficiary in absolute terms and relative terms is pharma. If you ask me where I should put my money on, if I have to deploy today, then I say put money in pharma funds. This is absolutely no-brainer trade. Right?
I was going to ask that and you answered that much before. But other than pharma sector then, Sandeep, what's looking good? Because we're pretty much at the fag end and last lap of the earnings season as well. No big upgrades, no big downgrades. It's been pretty, lukewarm sort of earnings that we've seen, barring a few fiascos here and there as well. What's been your read-through on where Indian investors should be looking at adding positions? Or, this structural shift and the kind of churn that you're seeing on the equity markets on pretty much a daily basis in terms of sector rotation, where is it that fresh money should be allocated?
So there's no debate to say that Indian economy has slowed down. The macro, we were very early to highlight in July 2024 that Indian macro thing. Obviously, it has indirectly impact on the earnings also. So we have seen impact. Now, how you look at, either you say it is the weak quarter is still deteriorating, or you try to see whether the cycle is bottoming out. I think earnings cycles is bottoming out. Some of the stocks, sector of stocks is bottomed out in March. Many names is in the final process of bottoming out with this July number. And I expect maybe the worst, the remaining one, including like tech companies, which is also suffering, should also bottom out from purely from an earning perspective by end of September. So if we believe that by September quarter, majority of the earning cycle should bottom out and base effect will also play a role, then whether I should be buyer in these names or I should be a seller, I think markets will be at least, I always see market is sometime 1 quarter, average 2 quarters ahead of the earning cycle bottom. Maybe in the current noise, this thought process can change or alter a bit because narrative in the market global is slightly different right now. So even let's say 1 quarter, I think if we have a view that the earnings is going to bottom out by September or so, then I should be a buyer in these names. So again, the questioning comes about where. So given the geopolitical volatility is there, I will clearly avoid, apart from pharma, getting into any global dependent companies. Okay. Most important ones, India centric. So obviously, what we like from the current level is the large infra name, India centric, irrespective of which state government, which central government. I think India is showing infrastructure needs are very meaningful. And even last 1 year, there are issues on the infra side also. Receivable related payments are coming a bit late. Order book is very good, unable to execute for various reasons. Irrespective of this narrative also, I think large infra names looks very good from the current level. Hotels and hospital stocks looks extremely good within pharma, diagnostic, or whether it's a domestic formulation, even generic, everything looks extremely good. Then if you ask me about within financial, we own many NBFC. We think NBFC has a potential to outperform banks. Insurance has potential to outperform banks. So financial services skewed towards insurance, skewed towards insurance side and the NBFC side. Then if I have to look at, then I look at very stock specific opportunity because power is another thesis, which is a decadal call for us. A long-term perspective, we should be a significantly overweight in power, despite that last 2 months was pretty challenging because early arrival of monsoon, the there was a small impact. Okay. But these are something we have to live with. The utilities company still looks good. So I think I would like to build a portfolio domestic centric, certainty of cash flow. We will not get carried away with a lot of narratives getting sold on the new age companies right nowadays. Noise is very high because US has done well, extremely high valuation. So I think that's the area which we as a house, we tend to avoid those names. So our focus is clearly where visibility on cash flows, triggers, and cycle bottoming out. I think we should remain invested and try to prune down some of these names where valuations are absurd. And if you really look at in today's context, last 1 year, one observation we always seen that in last 1 year, the impact cost in the market has come down or gone up significantly. Last few months, it has improved a bit, but again spiking. So entry and exit also becomes challenging in some of these illiquid names. That's the only thing we have to keep in mind, that one should not be too much in the illiquid names, though they move up very sharply, but other ways also grow.
Sure. But Sandeep, when you said that tech may actually see earnings revival, you meant IT services, right? The traditional ones.
Service. Yeah, it looks like because I think, see, the way I look at the last quarter will be far better. Okay, particularly October, mid-October onwards, if I have to say, October, beginning October, mid-October, I think that fourth quarter effectively will be better globally. All this Trump-related noise, which is there, I call it narrative, which he has built over a period of time, will also settle down. So this big crisis will be over. I expect even look at in the beginning of the year, we are also expecting the geopolitical volatility will also come down. I think it's a question of time when Russia-Ukraine issue will slightly settle down. Indirectly, a lot of pressure is getting built, I think, and if it happens, it will be larger interest. I'm very optimistic because as we always say, we do market employed analytics. The crude prices or the natural prices or any data which you look at, the gold prices are not endorsing further escalation. So I think globally things will start settling down, and maybe by the end of year, the fourth quarter looks more promising for India and particularly. And I say maybe this correction which I'm talking about may last in August to September end or mid-October type sort of correction which you're looking at for that. That also should settle down, and maybe fourth quarter will be better. So if I have a clear visibility that fourth quarter on data point looks constructive, then I should be a buyer rather than seller at this level. But I'm neither too excited nor too tense.
You're sounding like IT management, cautiously optimistic. But Sandeep, thank you so much for your chat today. Great speaking with you and great insight. Thank you.
Okay, let's connect with Mr. R.K. Rich, the President Emeritus at the Textile Association, to understand the kind of impact this announcement via Donald Trump on additional 25%